So now we move on to professional ethics. So professional ethics arise in the context of a profession such as lawyers, doctors, accountants and engineers. In terms of accountants, we could look at here. A distinguishing characteristic of the accountancy profession is the responsibility to act in the public interest. See, accountants are are working inside a company, but the thing is, they are also responsible for the public interest, because public public people, citizens, they invest their money in a company and they trust the accounts of the company. So the accounts are prepared by the accountants. So that there's some kind of a invisible binding between the accountant and the society. So if the accountant is going to fudge the numbers, fake the numbers, create a fake balance sheet, then the people might start to invest in this kind of a fraudulent company, and finally this company can become bankrupt. So accountants have a responsibility of preventing or protecting the public's money here. So in addition, for accountants, business ethics requires the application of professional ethics. So they should apply the professional ethics for them. IFAC's member organizations are required to apply ethical standards at least as stringent as the code. So there's a separate professional code of ethics for accountants, and it is issued by IFAC. So the decisions and behavior of accountants should reinforce these things. So accountants should help in creating a good governance, ethical practice, develop and promote ethical culture, foster trust and transparency, bring credibility, present a faithful picture of organizational health to stakeholders. So they should have a say in all these, and they have to push more of the ethics in the company. So accountants appointed to senior management positions, both in business and practice, have a particular responsibility to provide ethical and trusted leadership. They are not only expected to be technically competent, but to also make use their position of influence to encourage ethical behavior and decision making throughout their organization. So accountants should not only work and give their technical experience and expertise, they should also help the company to become much more ethical in nature. So these are the professional code of ethics issued by IFAC. So there are like 5 fundamental principles here. One is integrity, objectivity, professional competence and due care, confidentiality and professional behavior. So here we will see these things in detail. An accountant should have integrity. Integrity means straightforwardness and honesty. Objectivity means he should not be biased to things, and he should not have a conflict of interest. So what do we mean by objectivity? See, assume that you are an accountant and you have a friend. Just because you are a friend to someone, you should not change the accounts a little bit in favor of your friend. So that is not like allowed. So that is what objectivity is. So you don't bring in any bias. You should be objective as possible. So the next one is professional competence and due care. See, as an accountant, a company employs us or another individual employs us for our technical expertise. So it is the responsibility of the accountant to maintain professional knowledge and skill, and also we have to, as an accountant, you have to give the best of your competent, and as an accountant you have to give the best of your knowledge and expertise to your client or your employer. So the accountant should also know about the current developments in practice, legislation, techniques, and act diligently and in accordance with applicable technical and professional standards. So an accountant should always be updated in nature, because an employer or a individual client is getting our expertise. Okay, is paying for our expertise and also for an updated knowledge. So the next one is confidentiality. So if an accountant is working under a company and he has access to any secret information, such information should not be disclosed to any third party, so without proper and specific authority. So any information that an accountant gets from a company, he should not usually disclose it to some other people, or even for his own benefit he should not use that information. And the last one is professional behavior. to comply with relevant laws and regulations and avoid any action that discredits the profession. So it's following the laws and regulations.
So if you guys really like the video, put a like for us and share it with your friends who might find it useful. So if you guys have any queries or questions, post it in the comment section. We'll be happy to answer them.
So now we'll move on to conflicts of interest and ethical conflict resolution. This threats to professional ethics. So what are the various ways in which an accountant might be involving in some kind of an unethical activities? So the first one is self-interest threat. So to safeguard a job of an accountant, what he will do is he might give a much more better position of a company. He might increase the profit or sales of a company so that the company survives. Because the company survives, he also has a job. So his real reason for giving a fake report is to protect himself. So that is called as self-interest threat. Because of this, an accountant might become unethical. So the second one is self-review threat. An accountant might have given some kind of an idea or a suggestion earlier, okay, but that idea or suggestion would have actually become much worse, would have made the situation much worse or bad. So again the accountant might be called and asked to check whether the decision which he made earlier was good. So now what he will do is, in order to protect himself, he will say, yes, the earlier suggestion was good, okay, but some other implementation was wrong, or some other things have gone wrong, something like that he might tell. So that is called as a self-review threat. So a suggestion which you earlier given and you are again called to check on that suggestion. So this might lead to a self-review threat. So the next one is advocacy threat. So advocacy threat is when an accountant tries to speak on behalf of a client, he might go to a point of protecting the client. Okay, so that becomes a problem. An accountant should be objective. He should not cross the boundary and help other people. So he should not fake accounts. He should not support anyone. He should only tell the truth, okay, and the truth alone. The next one is familiarity threat. An accountant tries to give a fake account just because of long or close relationship with the client or employer. So that is called as familiarity threat. Intimidation threat refers to threat from a third party or another person towards the accountant for the accountant to work in an unprofessional or an unethical manner. Okay, so this might including attempts to exercise undue influence over the professional accountant. So these are the threats to professional ethics. So when an accountant faces some kind of an ethical conflict, how should he resolve it? So there are steps in which he should resolve. So these are not concrete steps, or these are not approved steps or anything. These are just general common sense. So the first one is identify the ethical issue. So find out what is the problem. Identify and evaluate alternative course of action. So try to find out what are the various ways in which the problem could be solved. Consider how each alternative affects the stakeholders. So also consider stakeholder here. Use ethical reasoning to resolve the dilemma. So find out how this problem can be resolved without affecting the stakeholders. Evaluate the rights of each party and their obligation to them. So it's again the stakeholder analysis. Weigh the costs and benefits of each alternative. Seek help if necessary to resolve the dilemma. If an accountant is unable to solve the problem on his own, he can also get help. So he can get help from the supervisor in the company or some other manager in the company. So he can also get support and guidance even from the board of directors. In case he's a professional accountant and he's associated with a body like ACCA or CAMA or CA, he can also get their support as to how he should proceed in this kind of a conflict. And finally, he can decide on the course of action and he can implement that. So these are a broad set of ideas here. So that's how ethical conflicts can be resolved. So here we look at the ethical threats and the safeguards. When an accountant faces some kind of an ethical threat, what kind of safeguard can be implemented? So safeguards are measures that may eliminate threat or reduce them to an acceptable level. So what are the safeguards created by the profession or legislation or regulation? It can be these. So Number one, a professional accountant is a person who should have education, training, experience, and requirements for entry into the profession. Then only an accountant can become a professional accountant. So that is the reason for the existence of CA, ACCA, or CAMA. So these courses give you all these kinds of entry and you become a professional accountant. They also conduct continuing professional development or CPD. So there is always an updated knowledge and with the accountant. Corporate governance regulations. So even corporate governance regulations, he has to keep studying. Professional standards, he has to update himself. Professional or regulatory monitoring and disciplinary procedures. So ACCA, CAMA, they have this kind of disciplinary procedures where any complaint they receive against any professional accountant, they take it and they start to investigate it. And if they find something reasonable where the accountant has been, where this professional accountant has been like unethical in nature, then they will start to take some kind of an action towards it, something like a fine or a penalty towards the accountant. So these are the ethical safeguards. So it's about training the accountant, ensuring that he constantly updates his knowledge, okay, ensuring that he follows the professional standards, and ensuring that there is a mechanism to constantly check on him. Through these, we can ensure that a professional accountant is much more ethical in nature. So now we move on to Tucker's 5 question. So this Tucker's 5 question helps you to find out or to solve any ethical problem in a business. So these are the Tucker's 5 questions. Number 1, is it profitable? Yes or no? Is it legal? Yes or no? Is it fair? See, fairness refers to how each and every stakeholder in that context or case is like handled. So if all the stakeholders are happy with what they have, then it is a yes. Or if some of them are going to be like betrayed or something, then it's going to be a no. Next question is it right? Will you be proud to tell it to everyone? Okay, yes, I have made this decision. Will you be proud to tell it? Yes or no? Is it sustainable or environmentally sound? So yes or no. So these are the ways in which you can easily solve a problem. So if the first question itself is going to be a no, you don't need to decide upon the other thing. If something is not profitable, then why should you be following the other questions? So usually you will have a conflict of interest in the third, fourth, or the fifth question. So that's how it works. So Tucker has not given the words in brackets or in the bold. Okay, those are my emphasis. So these are to make the questions much more easier to understand. I have given it like this. Okay. So this is an ethical scenario which is given by ACCA in its technical articles. You can just go through this. Here we have applied Tucker's 5 questions to the case. So this is question number 1, question number 2, question number 3, and the answers to that. Here we have applied the question number 4 and question number 5. So now we will move on to bribery and corruption. So what is bribery? The offer, promise, receipt of any gift, hospitality, loan, fee, reward, or other advantage to induce or reward behavior which is dishonest, illegal, or breach of trust. Okay, that apart from that, advantage to a public official with the intention of influencing the public official in the performance of their business function to obtain a business advantage. So if a company is going to illegally influence some person, whether it's going to be a government employee or any other person in a dishonest way, that is called as bribery. In order to ensure that bribery is to be reduced by the company, they should have created a bribery policy. So bribery policy has to be implemented across the company. So these things you can read it by yourself. Okay. So once a bribery policy has been implemented, then it has to be monitored and reviewed at a regular interval. So the HR head will monitor the effectiveness of the bribery policy. All employees are responsible for the success of this policy. Employees are invited to comment on it. So comments, suggestions, and queries should be addressed to the HR head. internal control systems and procedures will be subject to regular audits. So bribery is something which is very evil to a company and also to the society, and we can reduce it by creating policies and procedures. This policy is going to be created by the HR and will be monitored by the HR, and it also might come under the internal control systems and even under the internal audit.
So if you guys really like the video, put a like for us and share it with your friends who might find it useful. So if you guys have any queries or questions, post it in the comment section. We'll be like happy to answer them. If you guys have any other ideas for further videos, you can put it in the comment section. We'll be like creating a new video on that topic also. So thank you guys. We'll meet in the next video.